Introduction. As the U.S. marches toward 2026, the economic landscape is rapidly transforming due to technological innovation, global political shifts, demographic changes, and monetary policy developments. Understanding what lies ahead is critical for investors, businesses, and everyday Americans. This article explores 10 major predictions regarding wealth trends and the stock market in the United States by 2026, supported by current data, emerging signals, and macroeconomic trends. Prediction 1: AI and automation will reshape market leadership. By 2026, artificial intelligence, AI, will no longer be a niche segment. It will be the backbone of the U.S. economy. Companies leading in AI like NVIDIA, Microsoft, Alphabet, and emerging AI chip makers are predicted to dominate the S&P 500. Why it matters: AI is revolutionizing sectors from healthcare to logistics, finance to defense. Market impact: AI-driven productivity will boost corporate profits and push valuations higher for tech giants. Wealth effect: investors in AI-focused ETFs and AI infrastructure, data centers, chips, cloud are likely to see outsized gains. Prediction 2: the S&P 500 will surpass 6,000 points. The S&P 500 has shown remarkable resilience despite inflationary pressures and Fed rate hikes. With inflation expected to cool and the Fed likely to cut rates by mid-2025, a strong bull market is expected to carry over into 2026. Catalysts: soft landing in 2025, improving consumer sentiment, and robust earnings. Result: analysts expect the S&P 500 to hit or exceed 6,000 by end of 2026, up from around 5,500 in mid-2025. Key sectors: tech, energy transition, semiconductors, healthcare. Shar. Prediction 3: the great wealth transfer accelerates. An estimated $84 trillion in assets is expected to pass from baby boomers to younger generations over the next 2 decades. By 2026, this trend will be in full motion. Impact: millennials and Gen Z will control more wealth than ever before. Spending patterns: expect increased investment in ESG stocks, crypto, and AI startups. Real estate: a portion of inherited wealth will re-enter housing markets, potentially boosting real estate stocks despite recent downturns. Prediction 4: de-dollarization will drive commodity investments. As BRICS nations push for alternatives to the US dollar in trade, especially in oil and gold, investors may shift toward hard assets and commodity-linked stocks. Market impact: gold, silver, uranium, and copper stocks are predicted to outperform as hedges. ETFs to watch: GLD, GDX, gold, URNM, uranium, COPX, copper miners. Wealth strategy: high net worth investors will increase allocation to tangible assets and foreign equities. Prediction 5: real estate stocks will rebound but remain volatile by 2026. The Fed is expected to have normalized interest rates, reducing pressure on the housing market. However, affordability issues and regulatory changes will continue to cause volatility. Winners: REITs focused on data centers, logistics, and multifamily urban housing. Losers: office REITs, especially in large cities with hybrid work models. Wealth strategy: diversified REIT exposure through ETFs like VNQ may offer moderate growth with income. Prediction 6: U.S. wealth inequality will widen further. Despite a growing economy, the top 10% of Americans will continue to accumulate the vast majority of new wealth, driven by capital market gains. Statistics: the richest 10% now own over 70% of U.S. stocks, and this could climb to 75% by 2026. Drivers: tax policies, corporate buybacks, and passive investing. Market response: politically, this could lead to debates over wealth taxes or universal basic income by 2026 election season. Prediction 7: clean energy stocks will stage a comeback following the Biden administration's $369 billion clean energy investment under the Inflation Reduction Act. Many clean energy stocks lagged due to high rates. However, 2026 may be their year. Key catalysts: lower borrowing costs, rising global climate targets, mass adoption of EVs and battery storage tech. Hot stocks: Enphase Energy, NextEra Energy, Tesla for battery tech, and Brookfield Renewable. ETFs, ICLN, QCLN, and TAN could outperform broader markets. Prediction 8: U.S. tech giants will expand globally amid geopolitical tensions. By 2026, geopolitical tensions between the U.S. and China could push American tech giants to deepen their footprint in India, Southeast Asia, and Africa. Why it matters: Global diversification boosts earnings and reduces China exposure. Top players Apple, Google, Meta, and Amazon expanding infrastructure and data hubs outside China. Stock impact. Increased global sales may drive double digit growth in earnings. Prediction 9. Digital assets and tokenized securities will become mainstream. While Bitcoin and Ethereum remain volatile, blockchain technology is set to revolutionize how stocks, bonds, and real estate are traded. By 2026, major U.S. institutions will offer tokenized ETFs. NASDAQ may pilot blockchain based trading. The SEC could approve digital asset frameworks for public wealth implications. Early adopters in crypto infrastructure and tokenized real estate stand to gain massively. Prediction 10. The 2026 midterms will shake markets. U.S. midterm elections in November 2026 will play a crucial role in shaping tax policy, Fed independence, tech regulation, and energy strategy. If Republicans win, possible corporate tax cuts, deregulation, and defense stock surges. If Democrats win, climate spending increases, big tech scrutiny, and expanded healthcare funding. Volatility window. Expect market turbulence from September to December 2026 as campaigns heat up. Bonus forecast. Watch out for black swan risks. Though 2026 seems poised for growth, investors must remain cautious of unforeseen risks, including global conflicts, Taiwan or Middle East escalation, cybersecurity breaches affecting financial markets or infrastructure, AI regulation. Sudden limits on AI could hit tech stocks hard. Banking stress. Smaller banks may still suffer from commercial real estate exposure. Diversification, risk management, and liquidity will remain key in an unpredictable world.
Final thoughts.
Preparing for 2026. As we approach 2026, the future of wealth in the stock market in the U.S. hinges on a blend of innovation, monetary policy, global shifts, and investor psychology. Here's how individuals can position themselves. Actionable takeaways. Diversify beyond U.S. large caps. Consider global stocks, commodities, and real assets. Embrace AI, clean energy, and tokenization as transformative trends. Be politically aware. 2026 midterms may shape the next decade of economic policy. Manage risk. Don't chase the hottest trends blindly. Balance with quality dividend payers and bonds as rates fall. Stay informed. Financial literacy and adaptability will be your greatest assets. In summary, the 2026 outlook is optimistic but nuanced. Wealth will grow, but unevenly. Markets will rise, but not without volatility. The winners will be those who anticipate shifts early, invest wisely, and adapt rapidly. Let 2026 be the year you invest not just in markets, but in your financial intelligence.